So, a lot of traders think they have a solid plan, right? But the hard truth is, many are just rolling the dice and hoping for the best. In this explainer, we're going to tear down that wall between professional trading and pure gambling. We'll do it by digging into the 6 fundamental types of trading edges that can make all the difference.
And that brings us to the big question, one you really need to ask yourself. Are you actually trading, or are you just gambling with your hard-earned money? It's a tough one to face, for sure, but your answer is what separates a long-term career from just another blown-up account. The real difference, it all comes down to having a genuine, definable advantage. Just think about a casino for a second. We've all heard that saying, the house always wins. But why? It's not some kind of magic, it's pure math. Over thousands and thousands of bets, the casino has this tiny statistical advantage, what we call a positive expectancy, that pretty much guarantees they'll be profitable. As a trader, your job is to become the house, not the person feeding coins into the slot machine. And that is exactly what a trading edge is. It's any factor, any advantage at all, that tips those odds in your favor over the long run. It's the thing that transforms trading from a game of random chance into a game of skill and probability. Let's be really clear. Without an edge, you are, by definition, just gambling. Period. Okay, so let's kick things off with our first category of edges. This one is all about having better tools and faster access. We're talking about information and technology edges. First up, we've got the information edge. This is one of the oldest and most powerful advantages in the entire market. It's pretty simple, really. It's all about knowing something or understanding a piece of data that the rest of the market just doesn't see, at least not yet. An information edge can come in a lot of different forms. It could be having access to exclusive proprietary research, or maybe it's the ability to process huge amounts of data to find a hidden signal nobody else has spotted. It could even be as simple as truly understanding a news story before the crowd catches on. The key is that knowledge is not evenly distributed, and that imbalance creates huge opportunities. And to put this into perspective, get this. Just having access to a professional tool, something like a Bloomberg terminal, gives a trader an informational advantage over 99% of other retail traders out there. I mean, that's just a staggering figure. It really shows you how powerful having superior information can be.
But listen, in today's markets, information by itself often isn't enough. You also need to be fast. And that's where the technological edge comes in. This is all about executing your trades faster and more efficiently than anyone else. In this game, every single microsecond can count.
And look, this isn't just for the giant hedge funds with servers sitting right next to the exchanges. I mean, yeah, they definitely have an edge with their crazy hardware and software. But a smart, creative retail trader can absolutely build their own tech edge. Think about it. Custom keyboard hotkeys for lightning-fast order entry. Or maybe you program a web scraper that pulls data from a court website seconds before the official news hits. It's all about being clever and being fast. So, we've covered the tools and the speed, but what about the person making the decisions? Our next category gets into the human element, the analytical and psychological edges. All right, the analytical edge. This one is interesting because it's not about having different information. It's about interpreting the exact same information better than everybody else. Everyone might be staring at the same chart, reading the same press release, but the trader with an analytical edge is the one who sees the real story buried in the data. A perfect case in point. Imagine a trader who's spent years deep in the biotech industry. They understand FDA clinical trials inside and out. Well, they can analyze a company's new drug data with a level of accuracy that a generalist just can't touch. That deep, specialized expertise is the edge. Now we come to what might just be the single most important edge of them all, the psychological edge. This is your inner game. It's all about your discipline, your emotional control, your risk management. I'm telling you, you can have the best info and the sharpest analysis in the world, but if you let fear and greed drive your decisions, you're still going to lose. Let me just paint a quick picture for you. Imagine 2 traders. Both take a pretty big loss first thing in the morning. Trader 1, they get discouraged, rattled, they start feeling that fear. And when a perfect A+ setup comes along in the afternoon, they either skip it entirely or take a tiny, hesitant position. But Trader 2 is a different story. They understand that losses are just the cost of doing business. They stay focused, they see that afternoon opportunity for exactly what it is, and they execute flawlessly, turning a red day into a green one. That difference, that's pure psychological edge. All right. Our final two edges are a little different. They're less about the individual trader and more about the nitty-gritty mechanics of the market itself, the market's plumbing, if you will. Let's dig into the liquidity and structural edges.
So the liquidity edge is all about your ability to buy and sell in the market. Now, for a huge fund, their edge is being able to move massive orders without shoving the price around. But for a retail trader, your edge is actually the exact opposite. You can be way more nimble. You can jump in and out of positions that are meaningful for your account, but would be like a rounding error for some giant institution.
And last but not least, we have the structural edge. This one's all about taking advantage of the market's little imperfections. Because believe me, financial markets are not perfectly efficient. And all these little cracks, loopholes, and disconnects, well, they create opportunities for traders who know where to look.
So what does this actually look like in the real world? Well, it could be an arbitrage trade, buying a stock on one exchange and selling it for a tiny bit more on another, thousands of times a day. Or maybe it's noticing that an ETF is trading for less than its underlying assets are worth during a market panic. These are the kinds of structural hiccups that smart traders live for. Okay, so we've just walked through 6 very distinct types of edges. But here's the real secret. The thing that separates the good traders from the great ones, they don't rely on just one. They stack them. The real magic, the place where careers are made, is when you start combining these edges. Just imagine a trader who has a deep analytical understanding of a sector, who also has a tech edge to get news faster, and the psychological discipline to act on it without hesitation. That layering of advantages is what creates a truly powerful and sustainable edge in the market. As you can see here, a pro's advantage isn't just one slice of the pie, it's the whole thing. Each edge supports and strengthens the others, creating this really robust framework for consistent profits. Your goal should be to figure out how to build your own unique combination of these. So you've found an edge or two, you're starting to put it all together, you're all set, right? So, you've found an edge or two, you're starting to put it all together, you're all set, right? Well, not quite. The market is a living, breathing thing, and it's constantly adapting. And that brings us to the final and maybe the most important challenge of all. Here is the one thing you absolutely have to remember. No edge lasts forever. It's just a fact. As more and more people discover an inefficiency, it gets traded away and disappears. What worked like a charm last year might be totally useless this year. The best traders are in a constant state of evolution. They're always hunting for new edges and refining their old ones just to stay ahead of the curve. And all of this really just leaves us with one final thought. Understanding these 6 types of edges, that's the first step. The next, and much harder step, is to honestly look at your own strengths and start building. So the question I want to leave you with is this: what will your next edge be?